What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC trading 18 million shares today. Now, going back to over a year, that's been the lowest volume on the daily. If you look back at November 24th of last year, it traded a little over 18 million shares. We're sitting at that 1450 level. If you also remember, that was serious resistance going back to the May-June run-up, now acting as pretty strong level of support over the last few days leading up into earnings. In this video, I want to talk about a couple things, especially when it comes to earnings, more specifically how the market has been reacting to average, slightly below average earnings over the past week and a half. And then I want to digress and talk about another short squeeze narrative. I want to give you guys a completely unbiased, just a little bit of education on what I see happening behind the scenes, especially because the manipulation's easy and some of these institutions have just completely picked up on it. It's going to be unbiased. You can make money in these, but you could also get burned. And I feel like if you know this, it's going to help protect you. So let's get right into it. First off, take a look at this chart. Now, if you zoom in, you can see just over 18 million shares. Now, I was looking at the bars and it goes all the way back to, I believe, the 24th, where we traded 18,270,000, $14.5 leading up into earnings. A couple things unbiased. Now, I made another video talking about AMC earnings, talking about what I want to really focus on is I'm going to be looking at what they're going to be talking about when it comes to the amount of debt that they've paid down. Now, every single amount of debt that they pay down, it helps their bottom line because it's the less amount of money it needs to get wasted going towards interest. So I want to looking closely at that as well as guidance. Now, we've seen other companies report just average earnings better than or slightly below average earnings, and the market's still reacting very, very strong. This, article talks how, well, their year-over-year increases are going to, that massive gap that we saw of 700% year-over-year. Well, we're not going to see that clearly because in 2020, nothing was running. And obviously in 2020, when we got a little bit of a startup. Okay, so this article is talking a little bit about that. That comes out August 4th, and I'm also very keen on Adam Aaron's tweet because I gotta be open to at least exactly what he says. Now, that 18 did act as resistance, but looking at the chart right here, nothing is standing out as a solid pattern. Okay, so keep that in mind. Now let's switch narratives and switch focus and talk about these short squeezes. So it just seems like it's a very common theme with obviously a lot of people that have gotten involved with GameStop and AMC. It's that, high short interest narrative. Okay. You continuously look and see people posting, oh, look at the short interest on this stock. It's 250%, it's 300%. And like they're using like Ortex and I let me just tell you a little bit about what's happening behind the scenes. So first of all, these funds know that retail bites onto these high short interests. Okay. And you have to be unbiased when it comes to this. So if you can clearly see and understand how they manipulated AMC and GameStop short interest to be less, okay, than what it should be by various different tactics, okay? So if it shows AMC's short interest on Ortex is, I don't know, 20%, 18%, whatever it is, we've seen other different figures that have really proved that number should be much higher, but they've manipulated it to the downside. Well, what's to say they can't do the same thing but manipulate it to the upside? Meaning, if the real short interest is, I don't know, let's say nothing or even 5%, 10%, what's to say they can't manipulate it for it to show 180%, 260%, right? If they can do it one way, they can clearly do it another way. So here's a stock that it seems like it's been popular. People are asking about. Some people talked about it inside the group. I watched some other small cap rooms, okay, that were in on this one, TBLT. And if you look at this chart here, you can see it was trading over $1,000. Now, I did not do any research on this stock. Okay, I did not play it. I've been really focusing on large cap options as of lately because following the same few stocks and ETFs, you really begin to understand that these tickers' personalities, how they move, what price points strong with times of day. You really get to understand it, and I've been focusing heavily on that, especially because small caps haven't been that hot lately. but they most likely did a reverse split, which is why it was up at 1100 and now got all the way down to $1. But one thing I want to focus on, if you're looking at this chart, the first thing that should stick out to you is, this is the weekly chart, by the way, is going back all the way from 2019, 2020, 2021. You can see that there's really just no volume. I mean, 143,000 shares traded in a week, 46,000 shares traded in a week. And if you go back over the last few weeks, which I will zoom in for you, you can see now where it starts to spike. So it kind of caught that attention a couple of weeks ago, and it really, really got attention. Okay, probably about a week and a half ago, week of the 18th. So yeah, we're about a week and a half ago, which is where you see all of this volume, 287 million shares. Okay, and obviously this past week of 194 million shares. But something that you're missing, okay, and it's very easy to spot this, is look at this massive volume right here, 186 million shares. So somebody is targeting this stock specifically, and I think it's a genius tactic if you have obviously the capital, behind you, and run with me on this. So these funds know that retail bites on high short interest. Okay, so they're going out and they're finding these tickers, whether they're dead tickers, whether they're just easily manipulated, low volume. They're slowly loading up on them long. They're slowly loading up on them at $1, less than $1, or $1.34, $2, sometimes less than $1. Okay, but they're loading up on them, changing the narrative, getting these to be a wild short interest. I really don't know how they're doing it clearly, but like I said, you have to be unbiased. If they can manipulate it one way, they can manipulate it the other way. Okay, then they're pumping that narrative of 260%, 180%. 150%, whatever you want to say it is, whatever Ortex can report, or other of these platforms, reporting softwares can report and show to the viewers, getting some interest on it, volume spiking, it's pumping, and then they're just dumping. Okay, and they're banking on this. They're banking on this very heavily. They're loading between that 130 and that $2-3 range, getting it all the way up to $9, and just completely dumping. Now, this does not mean that you cannot make money on these. I mean, if you had purchased, if you look at this, you get to read a chart a little bit, you can see that this, $4 was resistance right here. Okay, and then we broke through. Now we know that once resistance, a chart likes to come back. These patterns like to come back down. A chart likes to test old resistance to act as new support. You could have loaded up just over this $4 area. Could have caught it here for a ride to 9. You could have caught it here for another ride to 9, and so forth. And if you understand that pattern, then of course there's money to be made, but also understanding behind it what is happening. And the reason why they're doing this is because they know what the pattern has been, what the narrative is. Retail's been attracted to a high short interest. Okay, so I just wanted to kind of make everybody aware of this. Some of you guys might be sitting there and be like, yeah, of course, I know this, Jeff. Okay, but when you're also, zooming out and looking and seeing some of the range, well, you don't know the history of this stock. It could have been, reverse split numerous different times in order to just stay afloat, not get delisted. Okay, not have to get traded as an OTC. There's many different things that could happen. But one thing you could do is you could look at that weekly volume and think to yourself, okay, when did I hear about this? Okay, what is the average range of this? I know that if it's getting bought up, massively between $1.34 and let's say, let's say $3. I know that that's going to be my safe zone to try to purchase this at. Okay, and when I want to get out of it, I'm going to look to get out of it around, $6, try to catch my 100%, move on from it and just leave. I'm not going to look back and try to catch any more, or so forth. So I hope this video helps. I hope it gives it a little bit of insight to this. If you're also looking at this and think, oh, listen, like there's a gap up here at $20, it can get up to here. Well, listen, this might be able to catch the attention. This might be able to continue going and so forth. But chances are somebody who loaded these 186 million shares, okay, and obviously it's not, one fund that probably loaded all of them, probably got shaded. Some of this volume got picked up on scanners, but they built a massive position. Okay, anywhere between this price range is going to be unloading 100%, 200%, obviously 300% gainers. So guys, that is it for this video. I hope it helped. I'll see you in the next one.